HELOC stands for Home Equity Line of Credit, which is a type of revolving credit that uses the equity in a home as collateral. In simple terms, a HELOC allows a homeowner to borrow money against the value of their home, up to a certain limit, which is determined by the lender based on factors such as the amount of equity in the home, the homeowner's credit score, and other financial considerations. Unlike a traditional loan, where you receive a lump sum of money and pay it back over time with fixed payments, with a HELOC, you have access to a line of credit that you can draw on as needed, up to the limit of the credit line. You only pay interest on the amount you borrow, and you can pay back the borrowed amount and borrow again repeatedly during the draw period, usually 10 to 15 years. After the draw period, the repayment period begins, during which you will need to make fixed payments to pay off the remaining balance over a set term. Here are some additional details about HELOCs. HELOCs are typically offered by banks, credit unions, and other financial institutions. To qualify for a HELOC, you typically need to have a significant amount of equity in your home, which is the difference between the value of your home and the amount of any outstanding mortgage debt. The interest rates on HELOCs are usually variable, meaning they can go up or down over time. The interest rate is usually based on an index, such as the prime rate, plus a margin determined by the lender. HELOCs often come with fees, such as an application fee, an appraisal fee, and an annual fee. Make sure you understand all of the fees associated with a HELOC before deciding to take one out. With a HELOC, you can use the funds for a variety of purposes, such as home improvements, debt consolidation, or paying for education expenses. However, it's important to use the funds responsibly and not overextend yourself financially. If you fail to make payments on your HELOC, your lender may be able to foreclose on your home, so it's important to make sure you can afford the payments before taking out a HELOC. Overall, a HELOC can be a useful financial tool for homeowners who need access to funds for a variety of purposes. However, it's important to understand the terms and conditions of a HELOC and to use the funds responsibly to avoid getting into financial trouble. Can a HELOC be used for investing in real estate? Yes, a HELOC can be used to invest in real estate, but there are some important factors to consider before doing so. Using a HELOC to invest in real estate can be a risky strategy, as it involves leveraging your home's equity to purchase an investment property. This means that if the investment doesn't perform as expected, you could be at risk of losing your home if you're unable to repay the HELOC. Additionally, using a HELOC to invest in real estate can be an expensive option, as the interest rates on HELOCs are often higher than those on traditional mortgages. It's important to consider the cost of borrowing and the potential returns on the investment to determine if it makes financial sense. If you do decide to use a HELOC to invest in real estate, it's important to have a solid investment plan in place and to understand the risks involved. You should also consult with a financial advisor or real estate professional to help guide your decision-making and to ensure that you're making a sound investment decision. What are the advantages and disadvantages of using a HELOC when investing in real estate? Using a HELOC to invest in real estate can have both advantages and disadvantages, which should be carefully considered before making a decision. Here are some potential pros and cons. Advantages. Access to funds. A HELOC can provide quick access to funds for a down payment or other real estate investment expenses. Lower interest rates. HELOCs often have lower interest rates than other forms of credit, such as credit cards or personal loans. Flexibility. A HELOC is a flexible form of credit, allowing you to borrow as much or as little as you need, up to the limit of the credit line. Potential tax benefits. The interest paid on a HELOC used for investment purposes may be tax deductible, depending on the circumstances. Disadvantages. Increased risk. Using a HELOC to invest in real estate involves leveraging your home's equity, which can increase your risk if the investment doesn't perform as expected. Higher interest rates. While HELOCs may have lower interest rates than some other forms of credit, they can be more expensive than traditional mortgage loans, which could impact your overall return on investment. Limited credit availability. If you max out your HELOC, you may not have access to additional funds if you need them. Potential negative impact on credit score. Taking on additional debt, such as a HELOC, can impact your credit score and affect your ability to obtain other forms of credit in the future. Ultimately, whether or not to use a HELOC to invest in real estate depends on your individual circumstances and investment goals. It's important to carefully consider the potential risks and benefits before making a decision, and to seek the advice of a financial advisor or real estate professional if you're unsure. Click the first link in the description if you'd like to gain equity in your home or rental properties and pay off your mortgage quickly without refinancing. Please like, share, and subscribe.